Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Friday, January 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 2.5 at 477. March soybeans were up 10.5 at 1029.5, and March Chicago wheat was down 2.25 at 535.25. No export sales announcements here this morning, so we'll get right to it. Good morning, guys. Hope everybody had a good evening there. Dustin, maybe a few thoughts as we start the morning. I know we've got talking about an improved weather scenario for South America for the next 7 to 10 days. We'll see if that comes to fruition, but certainly could have attributed a little bit to yesterday's sell-off. So maybe a few thoughts to wrap up the week, and then we'll throw it around the room.
Yeah, certainly. I think we are still, just looking at, that potential for Brazil to have the 170 million metric ton crop or larger. So, anytime you see a sell-off, I think that's the headlines that I read is like, well, South America is going to come through. Brazil is going to offset Argentine losses in a big way. And I don't disagree with, that headline. But I still wonder, why today, for example, we're 26, what are we at for July? No, 26.5 over, up 4.5 overnight, July to no. And, if the market really is worried about a massive Brazilian crop, why is it the November contract that they're selling? We should be still quite abundant. I mean, at near 350 to 400 million bushel of soybean carryout. And our exports are already, dropping off after that Brazilian harvest timeframe. That's pretty typical. That they should be undercutting us with a harvest basis. But 170 million metric ton crop is just massive. And the world is not short on beans. And July is in direct competition with that. So it's just a little surprising, I guess, to see, the back end of the market still weak. And it might be fund flows. Could be other reasons that we're not really quite aware of. The funds are so long the front end of the market and kind of short the back end.
I think that's a good point. Justin, we talk about it a lot, but I mean, that July no spread has been a favorite amongst traders for a long time, since I can remember. So maybe it is just some flow there.
Yeah, I tend to think so. That's nothing new. A lot of different traders out there, and there's always a group that likes the bull spread. And it's long and bull spread. They like to be long the front. So sometimes that works out great. Take corn, for example, where, it kind of worked out that, stocks got tighter, all these things, and they get paid to be long the front. So it's kind of a self-fulfilling prophecy too, is, you flip, let's take corn, for example, you flip from short, 300,000 contracts to long 300,000 contracts. And, the most liquid contracts, the front, so that's where the buying typically happens. So you invert the market. Well, it pays you, like we talk about with carries, where it pays you to be short. Look at wheat, like they love being short wheat when they earn carries because they, they're short the front contract, they get the roll and get, reestablish that short at a higher price and earn the carry, so to speak. The opposite's shown inverses. When they're long in an inverse, they can sell out of their long and re-own at a cheaper price, the next contract. So sometimes that kind of, drives that behavior a little bit. To Dustin's point, I don't, I think in the end, unless we continue to somehow cut supply or, those inverses should go away. But I think it's just I'll call it too new in this stage where they're flipping from short to long, call it since the report. That you're seeing those inverses, carry through. And because of the real being so weak, there's probably quite a bit of hedges already from South America in the July contract. And so, you could get, farmers don't like to miss out on bull markets, whether you're Brazilian or U.S., right? So you could be seeing some buying in some of those contracts too, even though there's a big crop. I mean, look at here, we've had plenty of big crops that aren't sold by the farmer in big rallies. So
yeah, I would also like to kind of point out, like, where the carry situation can go wrong. Like last year it is applying to the current situation of like how people have performed in the 24-25 season versus the 23-24 season. So if you go back to like December 23 corn, it was a very large carry to March, and then it was a very large carry from March to May, May to July, July to Sep, and then Sep to Dece. If you try to carry a bushel, that last year, for a 12-month period on, let's say, a long futures contract, which is the same thing as a basis only contract, which is widely more popular for the average grower to hold as a way to keep upside, you would have easily spent, near 80 cents a bushel just trying to roll that contract for that 12-month period. Massive, obviously, percentage of the price. And so to your point, where it costs you money to hold a long position, you get paid to be shorted in that outcome. This year, everyone remembered that, right? Everyone was thinking, okay, I'm not doing basis only contracts. I'm not doing DP because it really did not work out last year. And, anyone that was holding a position was kind of forced to sell sometime in last half of August. And that's where our Sep D spread went to full carry last year. But this year is kind of the opposite. We're seeing basis levels decline and spreads inverted. So it literally was that everyone is kind of convinced not to do basis only contracts. And that was technically the right thing to do in this year. So it's interesting how markets, just the pendulum swings the other way. What side of the boat is the majority of the crowd on is kind of the question, I think.
Mm-hmm. Yep. Yeah, I mean, we see those ebb and flows a lot, right? We saw like massive accumulators in 2020, right? And a lot of people get burnt, and then that was like the devil. And we were at $6-7 and nobody wanted to do sell high volatility. And then they got popular again about this last harvest. Yeah. So you do see that, we have short-term memories a lot of times in these markets and forget what's possible, but.
Well, that's a good point, Jess. I mean, Dustin, I don't know, but if you've been hearing about, like, I have started to hear a lot more chirping about premium type contracts out forward for this year that guys are starting to enter into because, Justin brought it up yesterday, but I mean, 452 is still not that exciting for new crop corn. But if guys can go 480 or 490 or, some kind of number they're trying to start. But
yeah, but it's out of necessity, isn't it? I mean, that's what happened in 2020. Yeah. And I think that's what's happening now is like, I got to go see my banker. I've got to make these numbers kind of work for my budgets. Mm-hmm. We're hearing a lot of that talk. It's like I need whatever price, 480. I need, I need this price to, break even or show my banker that I've got a path to make money. Right. So you sometimes you just make decisions that aren't the best because you have to.
Right. Yeah. And recently, I mean, we're getting up into the, high 550s. You can make an accumulator with a Euro knockout, which is a double up all at the end with kind of a tight knockout. You can make that probably close to $5, if not above $5 for a December timeframe. So if you're going into loan renewal and you kind of want to, you want to show sales that are above break even, which is widely regarded in the high fours, like 475, 485. We've talked about that a lot. University numbers show that. But all of a sudden you write down, I'm a third sold at $5 through an accumulator, right? That obviously looks very attractive to both the grower and the banker. The reality is, though, if you were to go right back down to contract lows, which could be a month from now, if something happens trade war wise or whatever, it's not really a sale. It gets knocked out, and in vice versa. If you're 33% sold, it doesn't take much of a situation where all of a sudden you're 66% sold if the market's up above $5. And a lot of times that's corresponding with lower yields. You might be 85% sold just with a slight reduction in yield estimates. So those things out of necessity, to your point, can be very detrimental. Trying to fix something, it might actually prevent us from being able to do things that are prudent, when that typical seasonal time frame comes, or if a weather event shows up A lot of times we see people try to panic buy things to cover that. And so I would just be very careful on those types of strategies. They're fictitious. They're not sales yet. They ultimately can turn into a $5 sale and 33%, but it's an exchange for risk, for uncertainty, and you're not really getting the certainty of a $5 sale yet.
Yeah, I think that is part of the reason we've seen option volatility stay low. I think there's a lot of premium selling out of necessity. So, I think a lot of times you're looking like, how are these options so cheap? Well, those options are cheap because that's what the commercial is selling to sell you that accumulator, right? So, you are basically selling very cheap vol, right? So you're transferring that cheap risk over to, or the commercial's transferring that to you, right? So, I do think we have seen a lot of that. We've obviously seen a massive change of ownership on this rally, as the funds are, we'll find out today, but long 300,000 plus futures in corn. So what, they bought 1.5 billion bushels from the low. So, it's still, that's still only what, 10% of the crop size, or more, less than that. But it's, massive change of ownership. Farmers been selling it as they should. You've seen basis levels break. So it's either way, it's been good for old crop because, we did have a big crop. A lot of people needed to sell. We had good basis levels. Those about, obviously broke since we've rallied, but I think you're also getting selling in new crop because like we talked about there, I don't think it's a secret now, right? Now we're in full loan period. Banks are struggling to take on new business. So people that are struggling with their current bank are searching for other banks, and it's kind of the same story. So you're going to see more people look at alternate financing, which obviously has high interest rates. So I think everyone's trying to go through this exercise of figuring out what they can put on paper to get that loan. And we're seeing some of that action.
Oh, very good. Got a couple minutes here. Ryland, we had a soft open yesterday and cattle just could not uptick. It grinded lower the whole session, and hogs were a little bit lower in the front, but a little better in the back. So why don't you wrap up the weekend meets for us?
Yeah, no, cash trades started picking up again, and yeah, we're hanging out at record high prices, but still the market was actually a little bit disappointed with the price action. It just kind of seemed like we wanted to see much better prices, but really we just saw 2 to 201 in the south and then 204 to 205 in the north. So these are still great prices. They're still higher than the previous week, but it seemed like we've been talking about, it seems like everybody just has some pretty big expectations for cash right now. So I think naturally you saw a little bit of a pullback in general, just off that alone. I mean, beef prices were mixed, and at this point, you're at record cash prices right now in both feeders and on the live side of the market. So, it feels like it can keep on gravitating higher, but doesn't necessarily have to go up just every single day. So the news is good coming into the day. I would expect to see some support. February's did close back over the 10-day moving average. So I think we're going to try to hold some of that technical support for right now going into next week. On the hog side, yeah, it just seemed like they got a little bit caught up in some of the outside market trade, just with pretty much the entire ag sector being lower yesterday. But the news wasn't too bad. Carcass did slip 44 cents at 90.39, and cash prices were just kind of flat. So I think the chart looks like it may be turning over a little bit. So maybe that's exacerbating the situation a little bit. But generally, the news is still pretty firm. And we, at this point, I think there's still a little bit of cautious optimism here that we can see some of this kind of speculative buying return, unless there's some big surprise coming around the corner with some new legislation or trade situation next week. So we'll see.
All right, very good. Appreciate the update there. If you're a regular to the show, you'll notice that Brian Williams is not with us here today. He's traveling, so nervously I'm turning over Fun Fact Friday duties to Ryland's going to give her a shot again, so we let him back in for one more shot. So
all right, well, big shoes to fill. So no, and a lot of this inauguration talk. So I mean, we know this coming up next week, and I was just looking at some past inaugurations, and there's some interesting stuff going on back in the day. Ulysses S. Grant inauguration in 1873. very cold day. So cold, in fact, that champagne was freezing out in the open. They had this big ceremony planned where they were going to just open up to canaries singing as he was making his inaugural address. The problem was it was so cold. When they revealed the canaries, they were all dead. They had frozen to death, and some even suggested that they even asphyxiated on gas coming out of lamps that were set up nearby. So that's not a good start. You'd kind of hope for a little bit better there. Ronald Reagan decided that he wanted jelly bellies at his inauguration. So he ordered 3 tons of jelly bellies in red, white, and blue. And in fact, the blueberry jelly belly was actually created for this inauguration. So he had used these jelly bellies, to quit smoking. So now with this whole Zyn thing, I mean, if Zyns are getting a little pricey, maybe want to turn to those blue jelly bellies. May want to read the ingredient label, because they are phasing out some of these ingredients now. Red dye number 3 being one of them. So may want to pay attention to that one. And then this, oddly enough, March 4th, 1841, freezing cold day again. I mean, maybe there's a pattern here. I don't know. But William Henry Harrison refused to wear an overcoat, refused to wear gloves, rattled off an 8,460 word inaugural address, the longest in history. And because of this fact, he stayed outside so long in that horrible weather, developed pneumonia, and passed away, sadly. It was the shortest presidential term in history at only 31 days. So, yeah. So there you go. Just keep this in mind. And then lastly,
was that like Darwinism? Yeah.
Yeah. I mean, you'd think so. You think we'd maybe move the inauguration to someplace a little warmer? There's a pattern. And lastly, Andrew Johnson, inaugurated for vice president in 1865, delivered his oath completely and utterly hammered. He was suffering a little bout of typhoid fever, and he decided to just start, sipping on the whiskey, maybe taking the edge off a little bit, but was so bombed he could barely make it through his speech and slurred the entire time unintelligibly. So a couple lessons to be learned here, but I look forward to this inauguration now, knowing these facts, see what comes up. So there you go.
Very good.
Good thing Trump doesn't drink. So
Yeah.
Yeah. Well, if he heard this, he's going to try to go after that 8,000 record, that 8,000 word record.
Yeah.
See what happens. Very, very good, Ryan. That was good stuff. Couple of things to point out. We've got markets will be closed on Monday in observance of Dr. Martin Luther King Jr. holiday. They will reopen 7:00 Monday evening, Central. So closed during the day session on Monday, open at night. We will not have a war room on Monday due to the markets being closed. So we'll be back with you guys on Tuesday. Jack will be in on Tuesday and Wednesday hosting. We're going to be out of town, so he'll be taking the show over, which will be good. A lot of fun. Another thing to point out too, as you saw in the intro, take a minute to listen to the outro. We've got some real special pricing going on from now till April 1st. So folks that want to visit with AgYield, talk about some of the things that we've been talking about on the show and see how those fit into your operation, give us a try, check us out. We do have some special pricing for folks till the beginning of April. So with that, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything AgYield. And again, thanks to everybody that supports the show. We're streaming live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments, guys. It was a good show. Hope everybody has a great weekend. We'll be back on Tuesday. We'll talk to you then.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, We're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at AgYield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.